This is Eric Muathe, Muathe.com, with a weekend market analysis for June 20th and June 21st, 2020. Let's take a look here for the week. The Dow did manage to close up about 1%. And for the week, the S&P 500 closed up about 1.8%. And for the week, we see that the Nasdaq was up about 3.7%. And of course, more importantly, the Nasdaq did close at an all-time weekly closing high. So let's begin with the Nasdaq weekly here, and we can see that if we take the recent weekly closing high, this becomes a good gauge for market strength and upside or downside momentum. So the number to watch here is 9731.18, which goes to this weekly closing high right there. As long as the market is positive and above that line and that level, then the bulls are still in control. We can expect momentum to be sideways or even higher. Now, at the same time, should there be a failed breakout, in other words, if the market drops back below this price, then that's a red flag and would suggest that prices are actually looking to go lower. So it's a simple way to gauge market strength. Anything above this number is bullish. Anything below that would be termed as being bearish. Now, we can also take a look at the recent daily closing high, which is right here. And that daily closing high also gives us another level to watch, which is the recent all-time daily closing high for the Nasdaq. The level there is 10,020.35. So, if the market is able, or the Nasdaq is able to clear and stay above that level again, that becomes an indicator that the market is very strong and we can actually see higher prices. As of Friday, we see the market did attempt to close above that level but failed. So there might be early signs of a market that is running out of upside momentum. So again, anything above this level, we can say net, this is a very strong momentum to the upside market. And the more we start pulling back from this level, the more the momentum starts switching to a potential pullback. Now, let's not forget, I've been talking to you guys about the monthly charts here, and we can see the monthly breakout took place a while back, and this is actually a follow-through month. If the market can hold and stay positive, it's going to be the second month in a row that the market is above the prior monthly closing high right here, just under 9,200. One thing we should not forget is if the market can actually find itself back above the 69.1 threshold, that would be very bullish. In fact, this chart might give us a good indicator of how this plays out. Let's take a look at a longer view. This is the Nasdaq monthly, and we can see what happened when the market moved above RSI 69.1. We had a very strong uptrend in the market, and the market pretty much stayed above that level until we broke below the 69.1 threshold. So this was a very desirable period for those who are looking to stay bullish. And again, we can see another visual example of the power of RSI 69.1 here in 2013. Again, the market stayed very strong until we broke down below that level many years later. So this was another very desirable multi-year bullish period. So what I'm saying is very simple here. We need to be aware that if the market can stay above 69.1 on the Nasdaq, right now it's at 67, but if it can stay above 69.1, be on the lookout for a substantial continuous move to the upside with shallow pullbacks. And of course, let's not forget that one of the MACDs is already trading at 3-year highs or longer. Actually, here we are seeing the Nasdaq moving to all-time highs. So the MACD is giving us confirmation of potential to the upside. All is needed here is for the Nasdaq to recapture the RSI 69.1. Of course, if it is unable to hold above the 69.1 threshold, just like we did here, this was a 69.1 RSI rejection, and we all know what happened after this rejection period. We saw the market experience a substantial sharp pullback here. So above 69.1 would be bullish. Failure to recapture the 69.1 threshold might actually be a sign of a market that doesn't have sustaining upside momentum. Let's take a look at the 4-hourly for the Nasdaq, and we can see there is an attempt here to move higher, but this is coming at the expense of a lower RSI setting. So that 4-hourly, as long as it remains the case, is giving us negative divergence. So that could be early signs of a market due for pullback. Let's take a look at the Dow Weekly. And what we see here is a single RSI line that we've been tracking. This line continues to be a hindrance and stalled the recent high move in the Dow. So as long as the market is unable to move above this single simple line, the market should be sideways at best. It's going to take a strong push through and above this line for the market to be in a sustained upward trend. If we take a look at the Dow 4-hourly, we see that there is a simple line here, a single RSI lows line from the recent lows. So this line here in the short term is a line to watch, because should we break below this line, that would suggest that the market is due for a major pullback since this recovery. So there should be a pullback. If we break this line, then expect a substantial pullback. If we can hold and continue riding this line, using it at support, then that means the market's next move is to test recent highs. The S&P 500 also has a similar weekly resistance. If we take this line here, now this line was well established. We have the lows here from late 2018, the lows here in the mid 2019, and then there was a substantial break here. We use my uniformity method and we draw a line as such, and you can see that this line did give us indication of potential resistance here. Again, if the market is going to move higher, it needs to take out this RSI line. Failure to do so in time means that the next meaningful direction, especially if we drop below RSI 50 on the weekly for the S&P 500, would suggest a market that is due for a pullback. Now, if we take a look at the 4-hourly for the SPX, we can also see that there's a similar line to that of the Dow that we just looked at, which is this RSI lows line on the 4-hourly. A break here means that there's a substantial size pullback. So that's something we need to watch. Now, the following line might be a stretch for some of you, but I'll explain it here quickly. But what this line is, it gives us a slight breakout level here, and we have a, let's call it an uptick in the market. We did drop below that line here for this gap down, and now that same line is becoming a double top resistance. So net, we need to clear above the red line if the market is to move higher. By the way, I should have pointed out at the beginning that this is an abbreviated version of my weekend market analysis video. But let's continue on here. We take a look at the weekly chart for the XLE, the energy sector ETF. We can see a clear RSI resistance line on the top side here. I should point out, notice how we had a big up week here, big weekly gain. So big weekly gain as the RSI moved above 50. Notice the exact opposite, just as an example of how to understand how markets behave. We had a move below 50 for a big down week, so cancelling each other out. So let me draw that RSI topside resistance line again. So topside resistance line, we need to clear this line before the XLE and the energy sector can have a sustained move higher. And then there's the issue of this backtest line here, which also became resistance. So if the XLE is going to move higher, it needs to take out these two lines. So these two lines need to be clear to the upside to free this instrument to go higher. Otherwise, as of right now, because of the resistance, I would say net this is sideways to down, as long as we are below those two lines. Let's take a look at USO, which tracks crude oil, and we can see there's a reason for the recent stalling in price just above the 50-day moving average. We see that this was a break level of the RSI somewhere here, which had led to a big drop in price off the highs there, believe it, at about 105. Of course, this is, I believe, split adjusted or reverse split adjusted. So what we do, we take that info and draw our uniformity resistance line. And this has become resistance over the last couple of weeks. So if the USO and crude oil is going to move higher, clearly they have to find a way to move above this line. So that's one line. There's another line which is giving us similar consideration, which is the RSI line from here, connecting the lows right there. So connecting these 2 points, extend it out. And again, you can see how it's becoming recent resistance, telling us that until we clear these two lines, crude oil and USO should be sideways to down. Keep in mind also, just like we saw with the S&P 500 and the Dow, there is a RSI lows line. If this line breaks, the recent RSI lows line on the daily, if it breaks, expect a sharp drop. A quick look at gold and GLD, we can see that we need to continue watching the breakout level that we've been tracking. It's the recent weekly closing high. We're very close to that number, so we really have to continue watching this for a potential breakout, which would be bullish for the mining sector. So for GLD, the price we've been watching is 163.93, which is the recent weekly closing high. Anything above that would be very bullish. That would be similar to gold index moving above the recent weekly closing high. Let me give you that number. It is 1756.30, coming to this weekly closing high. So bulls want to see a breakout above this level for a sustained move high. Otherwise, those who are bearish would like to see a failed weekly breakout attempt. Now, let's not forget that as far as the RSI is concerned on the monthly, gold continues to hold above 69.1. As we know, when an instrument is trading above 69.1, it is a sign of power. And so that's something we also have to keep in mind, that the momentum actually does favor upside movement if gold can clear the recent weekly closing high. We see that the MACDs and the RSIs are exactly where the bulls would want them to see. So in terms of minimum requirement and in terms of the ultimate Muathe breakout method, gold does meet the minimum requirements for a quality breakout. All it needs to do is clear the recent weekly closing high, as we discussed, 1756.30 for gold and 163.93 for GLD. Again, in this abbreviated video, let's take a look at BTC Bitcoin, and we can see that we are still trading in a range. Not a surprise. And we know that we need to clear this RSI resistance line on the weekly. This line has been where we've been seeing BTC Bitcoin struggle to move above this area. So a price breakout is needed above these lines before we can see a sustained move higher in price. As far as price is concerned, this would be similar to clearing this level here. Let's call it about the 10,000 price area is where Bitcoin needs to move above if there's going to be a sustained move to the upside. Eric Muathe, Muathe.com. As always, love and light, light and love. Namaste.